What's going on, traders? This is Jack with the Trading Tribe. Welcome back to the channel for another video. Today we are going to go through how I will use selling options to create passive income in the stock market, and I'll show a real-time example of this where I actually sold a vertical put credit spread on Microsoft, and we'll start by just breaking down the trade itself within my ThinkorSwim platform. Here to the right, we can see I have my daily chart open here, and I can actually see my vertical put spread. I can see the spread right here on my chart with the new ThinkorSwim show positions feature. And we can see essentially what I've done is I have sold the 430 puts, and then I've bought the 425 puts for protection. And this is essentially how these credit spreads work. What we'll essentially do is we'll look for stocks that are on uptrends typically, and then we'll wait till these stocks become a good deal and pull back to their moving averages. So we can see recently, right, Microsoft pulled back from all-time highs to this 200 daily moving average essentially, which is this red indicator here. And essentially after that has essentially just been consolidating. And there's a couple different ways we can play Microsoft, right, for kind of a bullish directional move. We can obviously buy the stock, right? We can buy calls, or what we can do is we can actually sell a credit spread, which is what I did. And a credit spread, the benefits are essentially if Microsoft, right, just kind of moves sideways. Let's just say for a month, Microsoft moves sideways and ends at 430 or 440, right? If I was in this as a stock trader, right, I'm barely going to be up anything because it didn't move that much. Same thing with calls, right? If I bought calls, depending on what strike and everything, the calls most likely will not be up that much, right? Because it did not make a large directional move. And recently, Microsoft has just kind of stayed sideways. And so it's not a great ticker for a directional move at this point, right? Because again, it's really just consolidating. But what you can do is you can actually sell a credit spread, which is what I've done. So it's taking kind of a separate directional play where the stock doesn't have to make a massive directional move for us to make the full profit. For a spread, essentially, if it ends up above this 430 strike, I get to keep all of that premium. And so essentially, when you sell this spread, there is premium that you collect. So if I go over to my trade tab, we can actually break this down. I'll open up the December 20 strike ladder. We can see I have a position on the 430s and on the 425s. I can actually just open up a ticket here where I'm selling those 430s again and I'm buying those 425s. This is obviously way later than I actually sold the spread, but this just shows how a spread works within ThinkorSwim. So if I'm selling a vertical spread, again, I'm selling an option. I'm taking the other side of a person betting against Microsoft. So a way to bet against Microsoft, right, is to buy a put, and I'm selling the put and collecting that premium. And then for protection, right, I'm buying that 425 put. So this is what we call a spread. And if I sell one of these at this point in time, right, I'll collect $187 per contract. And I'll collect that if the price of Microsoft ends above 430 on this date. And this is essentially how credit spreads work. And I'm already up, I think about, let's see, I think it's about $262 on this spread. So it's already began to work. I've actually been holding it for about a week now, but this is how I'll essentially do spreads. So in this case, if Microsoft ends above 430, by that date, I think I'm targeting making about $1,000 on this trade. And it's a nice way to basically take this trade as a bull, but not need a big directional move, right? If Microsoft again just stays sideways, the calls and the shares would not appreciate much, right? Because it has not moved much. Whereas selling vertical spreads, right, as long as it ends above that short strike, you make the full amount. Obviously, there's still risk management, right? If this thing does make a large move down, I will actually lose $1,000. So you have risk built in, just like all trades. But it's a nice way where if a stock stays sideways or makes a small move up or a big move up, right, with all three of those outcomes, you can make your full profit potential. Hopefully this really helps kind of show what you can do with selling vertical put credit spreads. This is a really, really nice way to actually trade all sorts of different stocks. What I'll typically do is stocks that are not making large directional moves. I will use this as kind of a passive income stream, and I'll sell monthly spreads. So I don't do this weekly, I don't do this daily. I'll do kind of longer term Microsoft spreads in this example to give Microsoft, right, a chance to make a larger move higher. That also balances the risk to reward a little bit. So if you do that, it makes it a little bit easier to have more of like a one-to-one risk to reward with credit spreads as well. Hopefully this helps. Feel free to leave a comment down below in the description. Feel free to like and subscribe to the channel too for a lot more content like this. And thanks everyone for the time.